Yo, what's going on? I just want to get on here real quick and do another trade summary / recap with you guys. Today was super duper clean. It was more like a continuation move from yesterday, so I'm going to go more in depth. There's also going to be a live execution on the exact trade that I caught today. But yeah, this is just utilizing wicks and specifically old highs and old lows. Just remember that two places where price is likely to reverse from is old highs, old lows, and inefficiencies. If you guys were to take one thing from this video, it's that right there. But on the higher time frame narrative, remember yesterday I give you guys a key weekly level, right? If you guys don't have that anchored out on your chart, this is my intraday level. So completely disregard that. That's useless, right? I give you guys the level that's good for this week, right? The entirety of this week, that's your premium and discount. I rolled over my contracts to March and that, okay, right on. So this is the exact level. I gave it to you guys last video, 25,299.75, right? That's your weekly. That level is hot for the entirety of this week. Like it's going to be anchored, like anchor it out on your chart. And yeah, but basically just understanding that price was inefficient right here, right? We had previous day's low for Friday, a previous week's low for the week prior. What did we do yesterday, right? We started at previous day's low, previous week's low, and then we retraced back into this measuring key inefficiency, right? And then that was our turning point for us to go significantly lower, right? So where is price likely going to reverse from now? You guys already know it, old highs, old lows, and inefficiencies. So continuing off of this inefficiency right here, right? We're coming off of a key measuring fair value gap from yesterday, right? If we don't sweep out any relative equal lows, there's no reasoning for us to be bullish, seriously, intraday wise at least. Like TS not that hard to comprehend. So higher time frame narrative, right? Higher time frame premium discount. Price was heavy. Price gave fair pricing. What are we gonna do intraday wise, right? Because intraday wise we have our dealing ranges as well. Okay, this was yesterday's trade. Okay, I'm on the wrong contracts. MNQ. Let's go for March. Right here. Yeah, it was right here. Again, so continuing off of that, right? Off of all that context, off of all that narrative, we're coming off of a higher time frame inefficiency. The only two places where price will reverse from is old highs, old lows, and inefficiencies. So price already came off of an inefficiency, pause, and look, we have all these relative equal highs, right? All these relative equal highs. So your time-based liquidity is from 7 o'clock to 9 o'clock. And then look what happens. We sweep in that once. And this is your intraday premium and discount. You guys could have that level, but again, your intraday premium and discounts are only good for your New York AM session, right? But yeah, so we sweep out this high. We're still diverging, by the way. So we still have a divergence. And then we sweep it out again. We create this wick. I got in super duper early, I'm not gonna lie. So I had to endure this entire, This entire retracement. I got in super duper early on this move, right? I saw this wick form. I'm like, okay, so I'm just gonna get in because wicks are technically gaps which are inefficiencies. So we created a gap in price and inefficiency, and then we swept out relative equal highs, right? And we're coming off of a higher time frame inefficient price, and where you gave out higher time frame fair price, and we're expensive today, right? So today's price action, we're expensive, right? Higher time frame narrative. We were expensive. We gave out that fair pricing for us to go lower. What's likely going to happen now? I can't make this up. So we sweep it out. We create an inefficiency. We fail to go to consequent encroachment or discount of that wick. So I just get in. My entry was a little late. It was like right here. With stops at what? At this high. And then we formed the 3 consecutive wicks. We formed Kaz's wick theory, right? Right before the entirety of the move, which was right here. Can't make that up. But we give discount pricing of this wick. My stops are still at this high. But yeah, I definitely could have refined my entry a little bit and not endured such a big retracement, but still, this is a protected high because we have SMTs, and then we already gave fair pricing higher time frame wise. We're in a premium. So then what happens? I'm targeting what? Relative equal lows, just liquidity. This was my take profit. Landed about 1,500 across 5 micros, right? All these gurus, all these influencers that are trading props, that are using multiple minis, unless they have a cushion and have been trading that funded account for months and months and months, there's no way that they're genuinely like not brute forcing payouts or profitability. You're gonna be like, yo, how do you brute force payouts and profitability? It's that statistically, let's say you have a win rate as low as 50%, right? If you keep buying these prop firm accounts and you keep blowing them and then you keep brute forcing profitability, like you're going to eventually, even with a run rate as low as 50, 60%, you're eventually going to get payouts, right? And that's generally what all these gurus do. They just brute force profitability and say, hey, have you gotten the payout? No, because if you actually do this consistently and you do this right, you're mitigating loss. You're not going to be over leveraging. You're not going to be using crazy amount of contracts like minis for no reason, right? So it's in this. The most I'm allowed to lose again is $400, right? So I was in there with 5 micros, right? Landed about a little over $1,500. So I'm just going to round down for this video, give you that clean $7,500 title. But yeah, with this deep retracement, swept out all these relative equal highs. We had multiple inefficiencies with these wicks. So TS is not that hard again. Higher time frame wise, we were expensive, right? We gave out that fair pricing. So it's going to happen intraday wise. We're expensive again. Price is only going to reverse intraday wise in a premium or in a discount. So if you look at it, look what happens here, right? You guys are going to see all the live executions. So I just kept trailing my stops with ICT flow, like order flow. So this order block right here, and then we had another order block right here. And then, yeah, we just hit full take profit. But it was super duper clean. These relative equal lows got swept out. And then look at the intraday premium and discount, and then look what happens, right? So these are the lows that swept out these relative equal lows, right? And look what happens, right? We trade up into this measuring inefficiency, which was, let's see our higher time frame or correlated time frame. You see how clean this measuring gap is? So let's say you waited for confirmation, right? I jumped the gun a little too early again because I had to endure this retracement, but let's say you waited for confirmation. You have this clear measuring gap after so it's all these, we have a protected high, we have Casa's wick theory, we're coming super duper clean off of it, not once, but twice. So 2 fractals in price where price is inefficient. And we already gave, again, I can't emphasize this enough, we gave fair pricing, higher time frame wise, we're expensive today's price action, we're expensive. What's likely going to happen? We're going to sweep out these lows. It's really that simple. And then let's say you missed that move, we're in a discount, you wait for confirmation, we sweep out these highs, we sweep out these lows, right? You could have caught this move up into this, measuring fair value gap. And let's say you missed this entire leg up, you could have caught this leg lower from this, measuring fair value gap. Time and time again, I can't make this up. But whenever you're in a discount, you don't want to short again. So I wouldn't have taken any shorts unless I got that premium entry. And I'm not taking any longs until I get that discount entry. It's that simple. That's my methodology. That's how I do it. But yeah, live execution. I'm gonna cue up some music. I'm gonna make sure it's super duper relaxing. Just a melody that's gonna get you guys going. You guys are gonna see that crazy retracement. But again, protected highs and protected lows. You guys know the drill. Let's run the footage.